Welcome to PlotLines, where we'll use our over 30 years of experience in real estate communications to uncover the real stories behind real estate. I'm Heather Crowell.
And I'm Britni Acriveau. Dive in with us as we invite guests to break down the ever-changing landscapes of real estate together.
Welcome back to PlotLines, everyone. Today we have Dan Eisenstadt, founder and CEO of Terravet Real Estate Solutions. Dan, hopefully you can share with us something about your background, your journey in commercial real estate, your journey to founding Terravet, and a little bit about Terravet so our listeners have some background.
Sounds good. Well, Heather, you and I both are New Yorkers originally. So I'm from Westchester, though. Don't hold it against me.
All right.
I guess I always say I'm a recovering lawyer. Came to Philadelphia to join a private equity and real estate group. And left about 15 years ago to co-found a group buying up and investing in and partnering in veterinary practices on the operating side, not on the real estate side, called Community Veterinary Partners. And did that and helped to run that and build that for about 5-6 years. Ultimately, we sold that to a private equity firm. And along the way, I had a call from one of our veterinarian partners who said, hey, I kept the real estate, thinking about sending our kid to college, want to sell the real estate. Do you want to buy it?
Okay.
And that was back in 2012. And that's really the first real estate we acquired. And the insight that I had was that there were a ton of folks that were institutional capital that were backing roll-ups of operating veterinary practices.
Yep.
No one was buying the PropCo.
Okay. Right.
And back then, all the real estate was held by veterinarians, by doctors. And I thought there was sort of an odd mismatch starting to develop where you had a lot of institutional capital chasing the OpCo with a very big focus on growth and revenue. And that was driving some increased demand for better facilities, for bigger facilities. Right. And yet you had doctors who were actually often selling the OpCo and didn't necessarily want to invest in expansion capital or the real estate. That was one piece. And then the second thing that started to happen was that I started to see that veterinarians, there was a labor shortage of veterinarians and staff, and that a lot of those folks had really a choice of where they wanted to work. Okay. And while it might have felt sort of homey for a pet owner 20 years ago to go to a converted house, if you're a doctor, veterinarian, and you're working 20 hours a day, you don't want to go work there. You want to work in a medical facility. Yeah. So they were driving towards, better facilities. Pet owners, certainly certain pet owners were saying, I want a more institutional quality, healthcare quality facility. And so all that made me think, hey, there may be a business in veterinary real estate. And so really institutionally, probably 6 or 7 years ago, we raised our first institutional fund, and then another fund, and then a private REIT. And we were really the first movers. And now there are a few players in veterinary real estate. And initially people sort of, were like, haha, I didn't even know that was a thing. And we're like,
it's super niche for sure. Yeah.
Super niche, yes. As my daughters would say, you're saying that. You're very niche. So, anyway, so that's the background story. And I guess the only other thing I would say is that from kind of an investment thesis point of view, the two other things to say are that, one, a lot of the investment in the OpCos came from private equity firms where their institutional limited partners didn't want those private equity firms putting money into real estate. Right. Because they had asset allocation issues, right? So CalPERS has, if they want to invest in real estate, they have a real estate bucket.
Got to go to their real estate fund.
They're going to put money into KKR. They don't want KKR's portfolio company having a ton of real estate on the balance sheet. Yep. So what started to happen was you'd have business development folks who were trying to grow the OpCo side, and you might have a doctor saying, well, I might be interested in selling in my practice, but you got to buy my real estate.
Right.
And now those folks needed a real estate partner. So enter Terravet as their real estate partner. Makes sense. I'd say the second insight is that, as we all know, kind of with institutional real estate, part of the issue is quality of the buildings and leases. Part of the question is tenant credit. Right. And when we got started, the tenant credits here were individual veterinarians, were doctors. Right. But as you're seeing consolidation in a sector, you start to have private equity building bigger tenant credits.
Yep. Okay.
Right. And then over time, the largest tenant in the veterinary sector is the largest player in the veterinary sector is Mars, the candy company,
Yeah.
which is the third largest company in the world. So
Interesting.
now all of a sudden we've got tenants with real credit that are
Yeah.
wholly owned subsidiaries of Mars when it started. And so from a thesis point of view, we're investing into improved tenant credit.
Of course.
So anyway,
Yeah.
probably said more than we needed to, but there you go. There's the
No.
quick
No, it's interesting.
I mean, I think it bodes really well into our next question, right, Dan? So our podcast is all about looking at narratives in different real estate asset classes and confirming, or debunking or talking through perspectives on it. So I know you've talked frequently with my team about, right, there's this idea that the cost of care for pets is rising. I mean, New York Times just did a big story on this month. But then there's also this narrative that the private equity firms are driving a lot of those costs. But as you've said to us before, so much is missing from that narrative. And you hit on a couple of those points starting out. But talk us through that a little bit more, right? I mean, it's not all so bad. I mean, don't we need that to keep up with the times, so to speak?
I think that's right. So look, there's a couple of narratives that are predominant narratives that are out there. One of them, which is true, is that the cost of veterinary care has risen a lot, has risen at a higher rate than the cost of other services or than generally inflation in the economy. True, right? Having said that, the question then is why, I guess twofold. Why is that the case, right? And did we start from a place of cost that was a reasonable place? Or were we at such a low
catching up?
place?
Yeah.
Right.
And maybe a third question is, why do pet owners, myself as a pet owner, why do we experience that cost as egregious, right? So let's go reverse. Let's start there, right? The cost of veterinary care feels like it's a lot because most people do not have pet insurance that covers regular wellness and regular costs.
Sure.
Whereas for health insurance, we all go in and we bring our kids into the pediatrician and we pay a $10 copay. And even though, or if there's hospitalization, God forbid, right, we pay whatever, a few $100s or $1,000 copay. The actual cost of that care is being covered by insurance, right? So the doctors, we all sort of intuitively know that, but because we don't actually spend it, we don't have sticker shock, right? So the actual cost of hospitalizing a pet, let's say a pet that swallows something and needs a surgery and needs to be in a veterinary hospital for 2 nights, right? The actual cost of that may be, a few $1,000, $4,000. If we put that into the human context, right? God forbid, we're talking, that's $100,000 at UPenn, right? So it's actually the cost of pet care isn't that high. It's that it's almost all private pay. And that the insurance market has not become that efficient. And right now, I think it's 2 to 3% of all pet owners have insurance. And by the way, even if you have pet insurance, you pay out of pocket. And then you submit your bill, and a few months later you get reimbursed. So you still feel the sticker shock, right? So that's one thing just about the cost of vet care, right? Second question is sort of, okay, why is it that vet care is going up so much? And did we start at a baseline that made sense, right? So let's go with the baseline question, right? The baseline question is 20 years ago, 30 years ago, most people would say, well, if I had a dog or a cat, I went to the veterinarian and the cost wasn't anywhere near what this was.
Right.
Well, one of the problems with that is we have a very romantic view of veterinary care from 30 or 40 years ago, or maybe 20 years ago. And I think that romantic view comes out in movies and books and all sorts of things. It's the individual veterinarian, usually played by a very attractive guy in a small town, right, in a movie. And they're mission driven. And they're doing, they're taking care of pets, and it's right. And that's all. And by the way, there's truth to that. But the truth is, because there's very little regulation, right? It's not like there is, because insurance, it is all private pay.
Right.
And so there's no insurance market that is regulating, that is checking regulations. There's very light regulation from state veterinary authorities. You have a very wide range of quality of care. And because the patient does not speak, you really have no idea about actually pain right? And so we have a romantic view, but in many respects, there was a really wide range with some wonderful veterinarians doing incredible jobs and some veterinarians that probably were not delivering great care, right? And at the same time, there was probably undercare, right? So in a lot of settings, 8, 9, 10 years in, if there was a cancerous tumor, the answer was probably euthanasia 30 years ago, unless you brought the pet to a specialized veterinary hospital. So the cost of care has increased because there's been pharmacological innovations, there's been diagnostic innovations, and there's been surgical innovations, all of which cost more, right? Because there's more, if you will, care being delivered, right? So one of the drivers of the cost of care is that, right? Another driver, for sure, is that you have institutional investors that have started to buy up these businesses and have started to drive up prices. But one of the questions is, well, maybe they're driving up prices because the pricing really wasn't fair given the labor and given all the costs there, right? So maybe we're seeing an increase in costs because they can drive up that cost, but also because it was undercharged in the past. Right? And then the final thing I'll just say about this, because often there's an assumption that when institutional investors come in, they're just sort of price gouging, and there's not necessarily any positive. And what I would say is, going back to sort of the range of quality of veterinary care in this sort of from the romantic 30 years ago days, right, is that because there was really not a lot of regulation, we really didn't have much in the way of standards. And that one of the things that institutional investors, our tenants, have actually done that is a positive is they've created some standards of care for their veterinarians, some more professional training, some oversight of what kind of care is delivered, right? I know of situations from 15 years ago where there were veterinarians that were saying, oh, I don't need to give a full vaccine because it's not necessary, which is not okay, right? Or a veterinarian saying, I'm going to take care of a dental on a dog without anesthetizing the dog. And the reason that they would do that is they would really be polishing up the dog's teeth. The problem is, if you're, as I understand it, not a veterinarian, play one on TV, but as I understand it, if you don't anesthetize a dog and put the dog down to sleep, you can't get into a dog's mouth to actually check for all sorts of stuff around the mouth, including cancerous tumors that can develop in the gums.
Oh, wow.
So there you're giving a pet owner a false sense of security. I've just done a cleaning, but if you didn't do the anesthesia with it, you didn't really do the proper diagnostic, right? So these are examples of stuff that I think some of the corporate investment in creating bigger, more process-oriented practice groups has actually created some standards that didn't exist. So along with, the cost and the investment, all this has come some benefits that I don't think comp well to human healthcare, where we know there's been enormous oversight forever because of insurance and payment and the like. So that's sort of a little bit of a fuller look at that story or the narrative.
Yeah, that's interesting. I would think also, like, bringing in a professional real estate owner, vets are not by nature, most doctors are not business people or real estate people. So I would think that the level of real estate quality, there's probably renovations, there's investment being made into the facility, right? So from an investor perspective, what are the differences between like traditional medical real estate and veterinary real estate? Are there, from a kind of structural perspective, are there differences?
No, it's a great question. I think, look, again, going back to sort of this romantic period 20, 30 years ago, there are a lot of veterinarians that got started in converted houses, right? Yeah. Because so many pet owners live in, bedroom communities. So you go and you get a little split level, and you have the break room upstairs, and you have the shag rug still up there, right? And you convert a couple of makeshift exam rooms, right?
Right.
And I don't know, there aren't good numbers on this, but I bet that still represents 25 to 30%, maybe more, of the veterinary practice real estate in the country, right? But as any of us have experienced, medical practices or hospitals, patient flow matters. Treatment areas matter, right? Areas that are sterilized matter, right?
Of course.
In terms of smell and cleanliness,
Right.
purpose-built buildings that have different HVAC systems, right? That have drainage in a better way, all change both the patient experience, but also the pet owner experience, and also certainly the medical professional experience, right? Sufficient, by the way, enough space. Where one of the other issues with these split level houses is you sometimes would have veterinary technicians carrying a 150-pound dog upstairs, right?
Right,
Again,
right.
not a great idea for a whole bunch of reasons, right? You want one floor. If you have a single floor, you want an elevator, right?
Yeah.
And so all of these things beg for purpose-built buildings, or at least purpose-converted buildings, right? The other thing that has started to happen more and more is, so there are obviously surgery suites in most veterinary practices, but there's also digital x-ray. So again, you want a room with digital x-ray.
Right.
You also have oxygen. There's an old school way of having oxygen tanks, right? Or you could have oxygen piped in, right?
Yep.
Again, these are all sort of innovations. And then as you get into away from general practice buildings, which we certainly invest in, and a bunch of, you get to what we would call specialty emergency veterinary hospital buildings. These are 24/7 hospitals. And here you're going to have MRIs and CTs, and sometimes linear accelerators for radiation treatment. You have a lot more controlled drugs. There are controlled drugs in almost every hospital, but certainly in specialty emergency hospitals. So you want a controlled drug area. If you're doing chemotherapy, you want special areas where chemo and radiation is happening.
Right.
All of this begs for a specialized purpose-built facility that is going to be safe for folks that are working there, safer for the pets and pet owners. But in the early days, and even now to a certain extent, but certainly 10 years ago, there are people that are doing these in converted houses or in strip centers.
Right.
And again, that's problematic. By the way, I mentioned controlled drugs. Even controlled drugs is an issue, as we've seen an epidemic of drug abuse, right? The issue of making sure that you have controlled drugs in a specific room locked down is a major issue, because you get addiction. We've seen in my short career in doing this, I've seen situations where you end up with a veterinarian or technician that's got a drug addiction problem and is starting to take controlled drugs, right? So again, it's not a specific facility issue, but if you don't have a facility built out where you're thinking about where those controlled drugs are kept and how, you're creating potential issues. So I think all of these issues sort of beg for more purpose-built. And I think the underlying issue, which I glossed over, is as we see an increasing sort of human-animal bond and treating of our pets like they're our children, then of course, why wouldn't we start bringing them to facilities that look a little bit more like human-animal facilities?
We were having that conversation before we got on about how my pet care is so dramatically different than my child care, right? I would never take my children to the place that I take my pet, but I don't have a choice to where I take my pet. So the same choice. So
Right. And over time, by the way, Heather, I think there's a secular conversion towards more purpose-built buildings, and maybe not you, but it's maybe your kids when they bring their pet in are more likely to have fewer options that are kind of that residential model. But it'll take some time.
Dan, tell us a bit more about the REIT specifically, and the benefits there and the growth that you've seen over the last 2 years.
Yeah, so we launched Terravet REIT a couple of years ago because what we identified is that there were a lot of veterinarians that had some of the best buildings, that had done a really good job of building out purpose-built buildings, particularly larger specialty emergency hospital buildings, where they had done really well in selling their hospitals, the OpCos, but had kept the PropCo. And the PropCo was now, let's just say a $10 million building owned by 3 veterinarians. And the 3 veterinarians, one of whom was retired, one was working part-time, one got sick. And invariably what happened was, okay, well, what are we doing with this real estate?
Right.
Yeah.
And typically partners that had been partners usually in the actual hospital that was now sold were still partners in the real estate.
Yep.
And often there were different risk tolerance among those three partners, which only get exacerbated as one's retiring or someone gets sick. And so one of them might say, well, I really would like to sell the building because I could use a little more liquidity, right? And another one might say, I don't want to pay capital gains tax, right? I have no desire. I'm good, right? And the other thing that was happening is that a lot of folks were saying, well, I'm a little uncomfortable because I own this building and it's a very high percentage of my net worth. But again, I don't want to pay capital gains tax by selling.
Right.
And what I really want, and also I don't know where I'm going to reinvest. I have left money in the market. I'm not sure I want to reinvest, but what I would really like to do is diversify. And if I could diversify into vet real estate, well, that would be great. So we formed the REIT in order to give those folks an opportunity to do Section 721 UPREIT transactions, where they could contribute their $10 million building in exchange for either equity or a combination of equity and cash in the REIT, right? And that then could create an elegant solution where the doctor maybe that wanted the cash could cash out, the ones that wanted the equity could do the equity. The equity piece is on a tax deferred basis. And so what we're really doing is we're creating a kind of a good solution to get diversification from a single building of veterinary real estate in a single location with a single tenant to an ownership interest in a pool of now 62 buildings in 30 locations with 20 odd different tenants, right? So and it's grown. We grew from, I think we launched with about 40 million of assets, and we have about 220 million of assets today in the REIT, with about coming up on $500 million of real estate across the platform.
Wow, that's incredible. And you just spoke to the general benefit of REITs across the board, which is investing in real estate without having to learn how to invest in real estate. Income experts like yourself. So
it's true, Heather. The other thing that I have some conviction on, because the REIT is now, and our platform, we now have veterinary real estate, and we have a little bit of human ophthalmology real estate, mostly ambulatory surgery centers. The other thing that we've built some conviction on is that when I look at the public net lease REITs, and there are, I think, 12 or 13 of them, what's interesting to me is often they're listed as a sector, right? Like, someone might say, well, you got industrial, you got retail, you got net lease. And I always think it's a bit of a misnomer, right? Because net lease are not a sector, right? They're a lease structure that actually cover 3, 4, 5 different sectors,
That's
right?
Yep.
And to me, they're the kind of multi-strategy of like the hedge fund world in the real estate world, right? Because what I think I would like as investors, I'd like to choose what sector, and then I'd like net lease within that sector. And yet in the public REIT world, you can't get that.
That's right.
You're going to buy a bundle of sectors, right? So to me, part of what Terravet, what we're trying to do is to say, no, the net lease that you might like the best is medical or niche medical and vet. Why? Because recession-resistant tenants, but I still get annual rent bumps, right? And I like the net lease structure of passing on expenses, insurance, maintenance to the tenant. But I like dialing into that healthcare piece. Well, again, you can do that with Terravet. You can't do that in the public REIT world. So that's a little bit of, we have conviction that's something we'd like to continue to grow and offer to investors.
Makes sense.
That makes sense. That's interesting. So I think we started out with a headline or two that we were talking about. As we wrap up our shows, our discussions, which I don't want to. This is very interesting, but we like to give our guests an opportunity to rewrite the headlines or to just write your dream headline that is applicable to your sector. So we'd like to offer you that opportunity now.
I think I'm nervous because my daughters are going to tell me that my headline is not a headline, but a paragraph.
Well, they don't have to be clickbait. So
okay. So I think the headline is, maybe there's a headline and a subheadline, right? The headline is that veterinary and niche medical real estate is an emerging sector that can deliver better risk return for investors, while also providing for better facilities for caregivers to deliver that care. And if we can do that, then we're going to deliver on a better risk return for investors, but also we're going to hopefully do some good and create better places for veterinarians and technicians and ophthalmologists and other doctors to deliver care and for people to receive that care and for pets to receive that care.
Yeah. Love
That's
it.
great. Yeah, that's perfect.
All right. Well, thanks so much for being with us, Dan. We appreciate your time and such an interesting sector and so much more to talk about. But I think we were able to really dive into a lot of interesting topics. So thanks for being with us today.
Thanks for having me.
Appreciate it.
Take care.
All right. Thanks.
So that was really interesting. I've never even heard of veterinary real estate as a specific sector, but a lot of worlds come together, right? If you think about pet care and how much pet ownership has even grown over the past few years and how obsessed we all are with our pets if we have one. And it actually seems really investable and like a smart strategy. So.
Totally. And it makes perfect. I mean, I think Dan does such a great job breaking it down, right? I mean, of course costs are rising and of course all things are changing, right? Look at our own healthcare as humans. It makes perfect sense. I also think it's interesting too, just there's so many parallels in this conversation about institutional investors and getting a bad rap, right? Like we see it even in single family rentals and many other asset classes, this idea that they're big bad guys
pulling the strings behind. But the investment that's driven into these sectors allows companies like Terravet to invest in the facilities and actually bring them up to a standard where we would want to bring our pets.
Right. And that benefits our communities, our veterinarians, our pet owners. Yeah. So it makes sense. I enjoyed speaking with Dan today.
He was great. Great. That was a lot of fun.
All right. Well, stay tuned for our next episode. Thanks for joining us today.
This podcast is a production of Gregory FCA. If you enjoyed our discussion, please subscribe wherever you listen to podcasts